Hello guys, hope I am on time. So for today's video or for today live, we'll try just to go and check some trades overview. If in this session you have some trades to show me, I can just give you my opinion. Now, we have seen last week that when the whole market collapsed for a few weeks, like what we saw last year, and then almost all the stocks stops going down and then they go up. So that was the opportunity to buy, and it was clear the whole market. And for those who follow indexes, and thank you very much for the people who follow indexes, benchmarks, and industries, they can relate to what I say. Or those who have got my training, they know perfectly what I am saying. So, hi, how are you? So, for today, since we will be going talking about stocks, the industries or the benchmarks or the indexes shows you the general mood of the market. Now, what I mean by general mood of the market, it means that the majority of stocks are going somewhere. Either they are going up. If there is a downtrend, most of the stocks, they are going down. Okay? So, but not all of them, not 100%. So you can find 80%, 70%, 90% are going down. But sometimes some industries or sectors, they are not going down. At the opposite, they do what the market is doing. And then you can find stocks that are going up and you get astonished. And you say to yourself, why those stocks are going up? Or you see one that is going up and the whole market is going down. This can happen in the market because of the buyers. Okay? So we have different buyers in USA, and we have even international traders, international investors, that they are buying stocks in the stock market. Sometimes some, they don't know even what's going on in our market. So they just buy. That's why you see those stocks are going up. Some mutual funds, maybe some hedge funds, maybe they are buying. That's why they go up, although the market is going down. You said I follow IPOs. Yes. IPOs, we have them in our trading, and whenever I find some good IPOs, I put them in the stock updates list, and when they are ready, we buy them. As an example, we have bought Zoom, but at the beginning, when just the IPO comes, Zoom was a very big stock at the time, and it moves 16, 15, 20% a day. So when I say this opportunity, we bought it in our trading account, and I bought it in my account. So when it was going down, I left it, and then we bought it again. So it depends on the trends. Now you said you can't make a living from trading and teaching. It is different than doing it. No, man, it is, you do it. There are some online you can see them on YouTube and other media. They have never traded in their life, but they show they know something. But they don't. Even they show wealth, they show cars, it's something else. I have seen some guys who their fathers or their parents are millionaires. They have a lot of money, and these guys, they show you cars, but it's not theirs. Okay, it's not from trading, because trading, in order to have this kind of cars, and so you should have millions of dollars in your hand to trade. But you say anxiety, depression, and isolation. This is what maybe you have read in books. Who tells you that the traders are anxious or depressed? Who tells you this? It is just isolated. What do you mean by isolation? There are some firms that they work together. If they are working together in a firm or in an investment club, they are making millions of dollars and they are trading together. Okay? Those people who are trading by themselves, most of them, they like what they do and they like when they are alone. Okay? For example, for me, when I want to buy a stock, I need to be alone. I don't need to share my what I bought on the same time. But I can show some other stocks, because in the market we have a lot. I can share some with my subscribers or so, because it is a paid information. So I give them that information. Like last year, for example, when the big downtrend, end of February, end of March. Now, in the end of March, we begin to buy. Now, this is verified. It means the guys that are following me, they see the day when I bought the stocks, the days or the week, 1 week, 2 weeks, 3 weeks, until the end of March, and then beginning of April, we have bought a lot of stocks. And these stocks have gone so wide later. So these things, you should be alone, but not isolated. Okay, you finish. For example, for us, like swing traders, we don't work that much. For me, it doesn't take me. When I want to see each day, I just check in less than a minute. I just check what's going on in the market. That's it. Most of the time, I don't touch my stocks for many months. And this is the good thing about swing trading. It means when I show you some stocks, what they do, you see them in the chart, you know that it takes many months, okay, to have the trend. It's not a trend of 1 day or 2 or 3. Okay, we are not doing like a very, very short thing. These short things, you can find them in some stocks that are manipulated. Okay, like penny stocks, like stocks that have a very high news in a few days. You can see that. Okay, so if we go and show you, for example, Apple. You can look at Apple. Now, this is the downtrend here. The downtrend of end of you can see here mid of February until here the mid of 23 March, and then here we begin the trend. This is what we are looking for. Okay, so this for example, it begins from 25th March and it ends around 23 July. Okay, so April, May, June, July, 4 months. Now this the trend of 4 months that we are looking for. Now here we have an earning. Let me make it big. Here you see there is an earning, there is a gap up, and the stock goes too much very quick, and then it collapses, as you can see, and it collapses. And these are very small trends. Most of the time I don't do these small trends because, you know, you enter, you go up, then you sell, then you go up. So it's very, very hard to have these small trends. Okay, all these are trends going up and down. Okay, all these are trends going up and down, and this is how do we trade. But when we find a trend that it is good, we stay in it. Okay, so this is for no. You say, why did you choose Apple? No, I choose mini stocks. Okay, and you can, for example, when I say Apple, Facebook, Tesla, there are many stocks that I follow for many years, and I buy them on the exact time of my strategy. But these, I have a list of this kind of stocks. When they are ready, I buy them at any moment in the year. So there is no, even if the market is not favorable and the stock is moving up, so I buy it. So I don't see the indexes always. But the indexes, it gives you a big entry. And most of the swing traders, the people who know how to trade, most of them, they have bought at the end of March. But for me, when I say to you, I bought for the end of the March, I have a proof. It means you go to my I can't lie about this because the video I made, for example, end of March, and I told guys, hey guys, today I bought Apple. Now, why? It's just because of my strategy. I showed them why, and since my guys are following my strategy, they know what I'm doing. But I also explain. So this, for example, when I buy, it has nothing to do with. It has nothing to do with the news, with Apple is a good company or bad company. No. It has nothing to do with fundamentals or news or what the analysts say or what this guy said. Or I don't follow news. That's why my strategy is typically relying on the chart itself. Okay? I don't know. You say Wall Street bankers, investments once give Peloton and iPhone to their workers. I have no idea why because I don't follow news, and I don't care what they do. It means if you know they do it for a purpose, it's okay. But for me, I don't follow companies' news. I don't. Because if I follow news, I will be trapped in that information. And this information that you see can't help you trade. For example, this information cannot tell you when to buy or when to exit the trade. Okay? So, as an example, I told you Apple, but we bought Tesla, we bought Facebook, we bought a lot of stocks. I can't even remember, because when the thing became wild, everything is going up. I just check all the list I have and I pick until our money ends. It means the buying power that we have ends, and then I stop. But there are other stocks. It means the whole market is going up. So you could find a lot of bargain, a lot of stocks, and there. Okay, so one of my strategy, especially when the stocks go down, there is no automatic search. When the stocks are going up, there is an automatic search, and there are criteria to choose in order to find some good stocks when they are going up. But when the stocks are going down, you can't find an automation that gives you these good stocks, because each stock is alone. They don't stop on the same day, the same time. A stock stops today, Tesla next week, Zoom after 1 month. So you should follow these stocks. I'm not saying daily, but you should follow them weekly. Only just to check them. Okay? You just check them where they are. But you understand that when the opportunity comes, you should have money to buy. It means if you don't have money, it will be a problem for you. Okay? Not you follow stocks and you don't have money. What do you do with these stocks? That's why I tell guys who are following the market without money. And they say, oh, I am training. No, you train yourself with money. Even if it is little money, train yourself with money. It means put money into the stock you bet on. Now, the good thing about this is that you feel about the money. You get scared. If you are getting scared and maybe it goes down a few days, you sell. It means, and you don't have strategy how to exit, it means that you need to learn more and more and more to control your feelings. But if you are, for example, someone tells me, I will not buy until the next collapse of the market. I tell you, who tells you that there is a next collapse of the market in the following months or this year or next year? Who tells you? It might the market go 1 year or 2 years or 3 years. Excellent. Okay, you don't find opportunity to buy. So this is not a strategy that you should follow, and you wait, and you don't know how much you wait. It means your money is staying doing nothing. 6 months, 1 year, 2 years, and you are waiting for collapse of the market. But even if the market collapse, you don't know how long it will take in order to go up again. It could take 1 year, 2 years, 3 years, 5 years. So playing on just on predicting things. So that's why for me, when I trade, I don't predict. I follow the strategy. I see an opportunity, I buy. I don't say to myself, for example, the stock might go down. Okay, it go down. What's the problem? Because if I don't succeed, I exit with a small loss, and this is the best thing you can do in trading. It means you exit with little loss, and this is like an insurance. It's like when you have insurance for your car and you have an accident, and then the insurance will pay for the car or for the accident. It means you are protected. So that's why we use the correct exit to exit some stocks. And even if you are mistaken and you exit the stock, you can buy it again. Because buying and selling depends on your conviction about trading. If you have strategy, if you have techniques, but if you don't know nothing, you just see the news, or an analyst is asking, Apple has a big deal, it will make a lot of money, I'm telling you, buy now. And you see that the stock is going down for 1 month, 2 months, 6 months. It means if you put your money, you will have a big loss because of this opinion. So that's why you should avoid opinions of analysts and those guys who are just, their opinion is just an opinion. You also, you can have an opinion better than them. Okay? And you buy on the good time when there is an opportunity to buy. Because we are not investors. So understand that. We are only swing traders. We follow trends. If there are trends in the market, we trade. If there are no trends, we should limit our trading and we don't use our capital too much in order not to lose too much. Because it will be volatile. You enter a trade, few days it goes down too much, so you sell. Then you do it with the second stock, third, fourth, fifth, and then after many unsuccessful trades, you will be losing a lot of money. And this is what happened to a lot of people when they don't know what's going on in the market. For example, the market is going down and they think that these stocks are still good and they hold them and they are against them. They lose 5%, then 10%, then 20%, then 30%, and then some of the guys they can lose 50% or 70% of their money. Even if later they go up, there is no guarantee that you can recover your money that you lost. So knowing when to buy, knowing when to exit is a very good thing. Now, I can give you another thing. Let me see. Okay, so let's go and check Facebook, for example. Okay, so this is the downtrend I told you last year, and this is the trend. Okay, this is the trend. Now Facebook was very, very volatile. It stays here very good, but later it was very, very volatile, as you can see here. A lot of volatility here. And then it continues to go up, then it go down, go up. So it is so, for example, here we have a gap up, and we have a gap up here, but the stock will be going down. It means if someone was here and he has a gap up, he has a lot of money, and then he lost it all if he stays. You see that? So we are doing the same with Facebook. Is the same as Apple, the same thing. Here you see that it is 19 March, the same as Facebook, the same days as Apple, the same. Okay, so this is like an opportunity to understand that when there is an opportunity in the market, you should go and find the good stocks. Most of them, you can't find them by search because they are down. They are not going up to find them by search. Because I have strategy, which is training level 2, on how to search for stocks when they are going up. But this, which is called training level 13, how to buy stock from support line, this is a very difficult strategy. That's why a lot of people, when you see the trend after 4 months, 5 months, 6 months, you say, why I didn't buy? Why? It's just because you don't know how to find stocks at that thing. If I showed you the when we bought at that time, you don't believe because you don't see any trend. Okay? And most of the beginners and intermediate, because they don't know how the trend begins, when they see the beginning, they are not sure that it is the good one. So they say, no, we don't buy until we see it. But after 3 months or 4 months, when you see it, it's over. People, they have already make money and they are selling now Now, if you come at that time and you begin to buy, what will happen to you? You will have volatile days, and most of the time you will lose a lot of your money because it becomes very volatile. And day traders, they work a lot. When the days are volatile, it means one day it goes 10%, the other day it goes down 50%, then 5% up, 3% down. So this is done by the day traders. They like when the stock is volatile. People are scared. They sell. The other guys, the other guys who are day traders, they see there is a big sell-off. They come and they sell short the stock for one day. Okay? And that's why they can make money with volatility. And you can see this in stocks. Okay? If I show you, for example, now in Facebook, okay? If you can see, here we have a day, here. You see that day? From 232, it goes to 115. Okay? So it is $17 in a day. $17. So this is just people to get scared, and the short sellers, they sell short. It happens here for a long time. Okay, see here. If you don't know that the stock is going down and you don't exit, the stock will be going down and down and down and down and down. So if you bought here, you will be losing a lot of money. So here the stock is very volatile, and it's not good time to buy Facebook. That's why I put these two lines here, which were very dangerous. Also here, you see, going up and down, up and down, up and down. So it was a very, very bad idea to buy at that time. Now, so at that time, we bought a lot of stocks because it was an opportunity that you don't see every time. Okay? If you see, I will go back to I will give you, for example, Dow Jones. Okay. Now look here. Now where do you see this downtrend like this? Where do you see it here? Do you see it here? No. So this is the only opportunity in 2000. Let me show you 2000. Let me see. 2021. Yes. Now, look here. If you look at the chart, this here is 2019, here, before the line. Now, from this line to this line, this is 2020, where we have the coronavirus. Now, the coronavirus downtrend is here, okay? But from end 20 or 18 or March, there is a big trend. You see that? Until now, it continues from last year, March, end of March, until now. It's still going up. So you see that? So the people who don't buy here, you can buy other days, yes, but the beginning is the beginning. The beginning of the trend is here, so you should buy here. Now, in order to buy here, you should know, and you should follow stocks, you should follow indexes, and this is in general what we do. And in order to become an expert in swing trading, you should have rules, you should have strategies, when and how to find this kind of stocks. And is it following the whole market or is it by themselves? Sometimes for the IPOs, sometimes they go by themselves. They don't follow the market. Why? Because those IPOs, they follow news. It's a new company, it's a big company, and sometimes it opens and then it begins going up for 1 month, 2 months, 3 months, or 6 months, and a lot of people, they make money. So in order to do the same, for me, I do the same. I choose some IPOs that are strong and I put them into a portfolio. I have a lot right now. I have about 10 or 15 stocks. Whenever a stock is good to buy, I just jump and buy it on time. Okay? So it's not any IPO, just it opens few days and just you buy, thinking that this company is good and big and famous, it will go up. No, it's traders who decide which stock to be pushed up and which stock to be sold short. So for us, because we don't know, you should only see the chart. Now, if you see the chart and you master the chart movement of the trends and stocks, and then you will be able to buy on time. Okay? There is another thing I want to tell you about the performance of these stocks. Let me show you. So let's give you this example of 2020. So the stock was going up a little bit, and then there is a coronavirus downtrend, and now this is the uptrend. Okay, so this is what happened 2020. Let's say it's here between these two. This is 2020. This is the downtrend. This is the uptrend. This is the uptrend of 2019. It was going up. Now, 2021, it continued to go up. We will never know when we have another one like this. Maybe, but we don't know. Maybe the 2021 will be good also, like 2020. But understand that in stocks, let's say this is Apple. Okay, let's go. Let me see. Apple. It was like 61. 61. It goes. If I see the whole trend, it goes to 130. Okay, let's say it doubled. Let's say you make 100% of your money in Apple in 2020. Okay, but if you see Tesla, for example, okay, let's me see Tesla. Okay, it was 85. It goes to 900. Okay, let's say it makes 1000%. Now you see the difference. You see the difference between Tesla and Apple. Now, this can happen to any stock, but you will never know. Now you said to yourself, if I have known, I will not buy Apple because it goes only 100%, and I could buy Tesla, which goes 1000% in the same time. in the same time, like 6 months or 7 months, the time is the same, but the performance is different. So this you will never know. Okay? That's why you can buy some stocks, and for example, you buy Tesla, you get 1,000, you get Apple, you get 100, then you get 50% in another stock, and another stock, for example, you have 400%, and you can have a good performance in this year, which was a very good year. Okay? So understand that guys, no one will tell you which stock will perform well, because no one knows. How do you know the future? If I know that Tesla will be better than Apple, I will put all my money, the whole account of my money into Tesla. But the problem is that you will never know. So since you don't know, so you should just buy 2 or 3 or 4, whatever you like. Because sometimes when you put all your money into one stock and it didn't do well, or it collapses, or you will be losing a lot of money also. Okay? So this something that you should always think about when you are buying, when it's a good time to buy. Understand that it's not the same. Okay? It's not the same. And do not listen to the people when they say, I know that it will get 100% or 500% or 1000%. I know. This I know, you will never know the future. Okay? If you know the future, you will be like Warren Buffett in a few months. Okay? Having billions of dollars in a few months, if you know what will be going in the future. Just if you know a few days, you go to penny stocks and you see those that go 1000% in a day, or I don't know, and you can each time put your money there. You become like Warren Buffett in a few months. But understand that trading is not like that. The real trading is that you bet on stocks, and then the results you see them later when you succeed. Even if you and the other guys succeed, but the performance, they will never be the same. If the stocks are not the same, you will never know. But the good thing is that what we think about trading is always think that you should make money each year. This is the principal thing you should get in your mind. Make money. It doesn't matter how much you make money, but it should be making money. Okay? Because we see the overall, you don't see, oh, I made 50% of this stock, 10% of this one. No, you should see the whole thing, and you should do the same. Okay? So guys, if you have questions, please ask, because I don't see the guys today. I don't know, maybe they don't get my email about this live. So guys, if you have other questions, please ask before I end this stream. And thank you very much, all of you guys who are here. I know some people are hiding. They don't ask questions. They just listen. But it's okay. It's okay. If you have other questions, you can ask, or you can go to my comment section and you can ask questions. I'm always there. Whenever you send me an email, I will answer you. Okay? So guys, I don't think that we have other questions. So this is about of today. I don't want to be very, very long. Thank you very much for watching, and see you next week.